The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And I don't think we're going to have a little beep today. But what do we have going on? Well, we're off 6 points on the S&P cash after being up fairly significantly. Dow's off 9, NASDAQ's off 58, Russell's off 16. And this, I suspect, is the retest that we were looking for before we go into fund buying on Friday. And we start seeing the markup phase into fund buying. I'm not, like I said yesterday, I wasn't looking for some kind of rip your face off rally in the indexes. I've been trying to place my positions around stocks that could have significant short squeezes here in the next week or so. One of the things I've been waiting for is the new numbers to come out on the bi-monthly shorting. So I can sync those up with the dailies and see what we've had. But I suspect we've got a lot of people shorting. There'll be a few of these stocks that as we get into lighter volume, probably starting tomorrow is my guess. And into Friday, then we'll probably have an entire week of light volume next week. And the old adage is don't be short a quiet market. Now, if this market remains rather quiet, probably going to see some dubious rumors, especially in these very short stocks. And probably see a little bit of fireworks in just a handful of the stocks as we go through it. Everything I continue to look at, in fact, we'll show it today, at least in options and other things, still says 2750. Maybe we get something that changes in this. I don't suspect. But unless volume really picks up today, I'm suspecting that my sector oscillators are all saying that we're very close to finding some lows in these things. And again, the sector oscillators are one of the things I love because guess what? It doesn't tell me last week something bottom. It actually warns me that we're coming into a top or a bottom a few days ahead of time, normally somewhere around 3 to 5 days. And so we're seeing the first hits of those the last couple of days on some of those sectors, and I suspect today we're going to have the hit of a bunch more of those. And I always like it because generally it does set up kind of a nice bounce out of the market, but we'll see. Anyway, off 10 points on the S&P cash. I know a lot of people are going to be incredibly bearish on this news and decide to add even more to the short positions. If volume picks up, they probably will be right. If volume remains rather low, in fact, last Friday we had 10 billion shares on the total market. If we get like 7.5 billion shares, then my guess is that we do have a setup for a market that just goes slightly higher, probably through the end of next week in fund buying, and maybe 2750, maybe 2760 on the S&P cash. And if you wanted to be short that, at least looking ahead, since no one actually has the closing price for each day next week yet, we'll have to all wait. Unless something really changes, I just suspect that we're really kind of wringing out the washcloth here today. And after you hit that first stop down on my sector oscillators, you generally get a handful of days, and then you want to start acting. So, I'm thinking it's that. Well, you can think that the train has left the station. I actually think that if you are going to go short, it is probably going to be after next week when you're going to make money. So we'll see. What else do we have? That's kind of it at the moment. Let's talk a little bit of history, and then we'll get into some charts, and I'll show you why we did it. Well, certainly you can have that opinion. Okay, what do we have going on? Oh, on history. I got to go to my history page. On this day in 1972, the iconic video game company Atari is founded by Nolan Bushnell and Ted Dabney. Their first video game, Pong, was the first commercially successful video game and led to the start of the video game industry. In 1977, Atari's video computer system, known as the VCS, and later the Atari 2600, popularized the home video game market. Before the video game crash of 1983, Atari was one of the fastest growing companies in the history of the United States, and the brand was synonymous with video games. I actually met Nolan Bushnell a handful of times. The time that I actually got to spend real time with him was either late 1993 or early 1994. I can't remember it. All I remember was it was in Chicago and it was cold as all get out. At that time, he was looking at trying to save Commodore business machines. And as one of the biggest manufacturers of additional peripherals for it with our company at the time, he wanted to know what we thought and what was going on in it. And there was a big meeting going on. I asked him what he thought about Commodore Business Machine firing all the programmers the day before. He had not heard about it. He ran out, made some phone calls. That was the end of our meeting for that day. But I met him one more time after that. But very interesting guy. He also had a theory about video games, and that is, and it carries on to today. And that is that you really need to have a game that you start at least are able to have a little bit of fun with, but that is incredibly hard and time consuming to master. And they basically set up a lot of different games and found out that if it was too easy, then no one cared. If it was too hard, no one cared. But if it was easy at the beginning and then got progressively harder, each level being a little bit more difficult, it became incredibly satisfying for the player. So that was it. But that's it. What else do we have going on out here? Okay. We got a little bit of time here. We did have, probably won't have enough time to take a look at it, but there was, gonna run out of time. Somebody asked me about this stock the other day, and I said, well, you got to bounce here, but you got to be wary of these stocks, especially these ones that are from China. You really don't have a lot of history on. It was IQ. Didn't know a lot about it, but he had one bounce yesterday, and now some pretty dark cloud cover on it. Volume's not picking up, though. But I don't like the energy off this June 19th high back down to this June 25th low. We'll come back and we'll talk about the reasons why I suspect that we probably have another 7 days higher prices.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I said I'd tell you why I thought that we had the option at least to go higher. And that is that option market makers have not decided to really change much about what's going on into next month. They kind of think that we're just going to plod on right around here. I'm actually showing you that chart now. And you know, what are we at? We closed at 271.60 on the SPYs. This is showing somewhere around 274.50 on the SPYs. So you generally want to give another point to it, which puts you right around 27.50 or 27.60 on the S&P cash for expiration. And can that vary? It can, and I'll watch it again tonight. But so far, none of the option market makers have blinked, which makes me think that they think that this market is going sideways to maybe just a little higher. And if they start moving it down, I will change my opinion. But right now, I don't see a lot. Volume has decreased on the push down from Friday. And right now, we have 4.5 billion shares on the S&P cash for the U.S. equities total market volume from the CBOE. That's everything, the NYSE and the NASDAQ and every ETN and ETF and everything in the world. Again, we're going against about a 10 billion share down day on Friday. And so maybe it started, maybe we go down a lighter volume, but right now we're not having the kind of acceleration that I think we would get. And again, as we start looking at some of the other things I look at, which are my sector oscillators, they all kind of show that, well, we probably are going to have some kind of low with some kind of bounce over the next week. Now, I think we can argue about what that bounce is going to be. I'm not highly optimistic about it. I think we just go slowly higher, and a handful of stocks that are highly short will be the big winners. And other than that, just going to kind of play around here for a while. So I'll be looking at that. Of course, tonight is the night that the bi-monthly short data comes out. So I'm kind of waiting for that to add it. I've got one position in the daily and one position in the investment newsletter. For right now, I'm happy with them. That's about as much risk as I want to put on. But I see some more numbers tonight, and that could quickly change with me adding more. Wouldn't be surprised if the market closes just slightly positive on the day and continues to maybe just kind of inch ahead until a week from Friday. Give me a call at 877-927-6648. You can email me at path@tfnn.com. And of course, you can always post a message in the den. Let's go ahead and take a look at some stocks in Nflx. Some of the bigger ones out here. You did kind of have a higher day out here. Volume has not really come in. It looks like we will have gone higher, though, on Nflx on higher volume by the end of the day. We've got 12.6 million shares right now compared to the 15.1 million shares before. Now, on the down day of Friday, or actually Monday, we had 22.5 million shares. So would it be inconceivable that we get back as we have into this candle today, but on lighter volume? You opened a little higher, so this one's a little unclear. Let's take a quick look at Microsoft. You were down hard on Friday on Microsoft with 35 million shares. You're down today on 16.6 million shares so far. So basically getting in and down into those prices with lighter volume. Do you have to retest the 97.30 in the June 25th low on Microsoft? I don't know. I think if you continue with this light of volume, that may be it. Not saying to go long. I wouldn't go long for a 2% move higher, as this thing may go back up above 100 here for a day or two. But I will say that a lot of these stocks, if you are bearish, are starting to give you the indications of going one more time higher above either the 9-day simple moving average or the displaced moving average. And if you wanted to be extremely bearish, pop back above those, go above those for a handful of days, and then close back below that 9-day or 3x3 displaced moving average. And that's generally when things fall apart. You've had the first pull back. You have another kind of a rally attempt. And if it's weak, that's generally where you're going to find the main destruction. Markets don't generally just go to a high and then roll over and then that's it. Even when they come off of highs on higher volume, you normally get one, if you're long, you get one chance to get out. And if you're short, you get one, or if you want to short, you get one chance to get in. And we just haven't seen that. Now, assuming we're going to have lighter volume, probably through the next week, that we have fun buying that could start as early as tomorrow, but probably going to see a little bit on Friday and certainly a lot on Monday. That fun buying could push these stocks back up, squeeze a little of a handful of people that are short way too soon, have the markets go up a little higher, close above this 9-day moving average or the displaced moving average, which will show that way. And then you get maybe a close back below that on a week from Friday. What is that going to be? The 4th, 5th, 6th, the 6th. And then that opens you back, coming back to the 9th with a fairly bearish position. If you wanted to be bullish, probably the nicest thing would for us just to be hanging around to these levels with lighter volume. So we can look at both scenarios as we go forward. I am putting my money in the handful of stocks that people are piling on way too much on the short position side. Okay, so let's take a look at Tesla, another one of these. This is kind of the poster child for what I'm looking at in the Joe DiNapoli double repo pattern. You get 10 or 15 days above the moving average. You get a handful of days underneath it. You close back above it. And then the next close below it is normally where you want to pull the trigger. That is kind of the definition of a parabolic move up that ends with failure. And of course, you want lighter volume. We went to 373.73 last week. My guess is that you could get back up to 360 in this kind of double repo pattern. And that stands for repenetration pattern. But it all starts with going through a handful of days to the upside where this thing is way above that displaced moving average, close below it for a handful of days, close above it for a handful of days, and you pull the trigger. The next time it pulls back underneath that average. So we'll be watching what we'll be talking about. Be back after this time.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a very good question. I know I answer it, I think, about 4 times a year because we are always getting new listeners. But the question is, does fund buying go on for equities only, or does it go to bonds, grains, and other instruments? Please can you explain? And I'm going to give you the long-winded answer because it really matters. There are two kinds of people on Wall Street. Well, more than two, but for the purpose of this discussion, there are two. There are fund managers and there are money managers. These guys have two very different types of businesses. Money managers may be in some big retirement fund or something like that. Fund managers actually run a single fund, like maybe the SMHs or maybe some other kind of ETF. Their charter says that they must be 100% invested by, depends on, I'd say 80% of them say by the third trading day of the month. And the last, somewhere between the last 2 days of the month and the first 3 trading days of the month, you're going to be fully invested. Now, I've never seen anybody prosecuted that didn't do this. Sometimes they wait an extra day and the market sells off and they get a little bit of an advantage. But the fund managers have to be 100% invested. The thought is that the money managers, the guys probably working for some retirement fund, will be long their ETF or their fund. And then they are responsible for hedging the downside risk in that fund. So if you hedged it as the ETF guy and they hedged it, well, guess what? Your risk is all messed up and you can't identify it to your people that you're responsible for, that you have fiduciary responsibility for. So you've got basically two sides of a coin. One that says I'm going to be long, I'm going to be 100% long by this date every month when this cash comes in. The other one who says, okay, I know I'm going to be trying to hedge and reset my hedges come the third or fourth or fifth day of each month as I go back and see what this has done. It's had a tremendous run. Maybe the market's going to pull back. Maybe I put on a bigger hedge because the market's gone up higher. But again, that's all part of the money manager's job, not the fund manager job. The fund manager's job is to make sure that his fund going higher or lower loses the least amount of money when it goes lower and makes the most amount of money when it goes higher. And he tries to change the stocks that are in his fund to do that. So hopefully, hopefully that answers your question. Not every fund does it. And the question about bonds and grains and other instruments, you have to read the charter for whatever it is to see what those guys do. On equity and funds and equity funds, it's all the same. They're all pretty much set up the same way, because if you don't set yourself up that way, then none of the big CalPERS or anybody else is going to buy your fund. They can't. They can't figure out. They don't know what you've done to hedge it. They don't know how long you are. This just makes it very easy for the big guys who spend the most amount of money to make sure that their risk-reward portfolios are set up correctly. And you can go back and look at the market, and there's not a lot of signals out there that just say, every month you want to do this or that. But 8 out of every 10 months, you've got about a 1.5% on the S&P margin higher than you do lower over the average. So the problem is, can you have some really horrible news like a 9/11 or something like that that drives the market down into fund buying? The answer is yes. The downside is that you're basically trying 1 out of 5 times to guess when that is. And also, since everybody knows that everybody has to buy, guess what the Wall Street does? They just mark the stocks up. So it is very hard to go against, even in a downtrend, that part of the market. Even in a downtrend, and even when the market goes lower, it goes lower slower. And generally, you get out of that period, and the market kind of gets back to what it was going to do originally. That's why I suspect that we're going to have slightly higher, as I said, back to maybe 2750-ish, which is, we could do that in the next 30 minutes if we had good news. I just don't suspect there's a lot higher than that in the near-term future, and why I would suggest that the indexes probably don't have a lot of money in them, but there's a handful of individual stocks, like we said, like Tesla. Would I go long that one? No, but there's a handful of other ones that have. Oh, are you on? Hello?
Hello?
Yep, someone must be on. Oh, we've got Janice. Wasn't looking at there. I got to talking and forgot it all. How you doing?
Hi, David. I'm looking at Chesapeake Energy.
Mm-hmm.
I have been in the stock probably since the high threes.
Okay.
So I was wondering if I should take some profit now or just ride this out.
So what were you thinking when you started?
Basically, I was just looking at the chart, and the price of gasoline going up, and I just took a chance here with this, and so I kind of wrote it out. I saw some of the volume going up on it back in March.
Okay.
So I got in at about 375.
Well, certainly you've got a great profit. You had a spike today. The volume's okay so far. So you don't have a great signal, other than the fact that you wanted to have somewhere around 138 million shares today, and you got about 46 million shares. So I guess the question is, how much more do you think that there is in this thing?
Right.
Do you have an answer to that?
You know what? I don't know. I was looking at the weekly chart also, and I guess that's the $1 million question: is how much more do I think this is going to go up, or should I take possibly half of it off the table?
Well, I'd either take all or half, all of it or none of it. I don't understand the half part of it. Either it's a bad idea to hold it, or it's a good idea to hold it. Right.
Right.
I mean, that I don't understand that half part of it. I do in options, where maybe you've got half the options are in the money, and then you get a free ride or something. Mm-hmm. But in an equity, unless you see something else, you know when earnings are on this?
They're coming up soon. They might be August.
Let's take a quick look at that real quick. Okay. CHK. You want to hold on through the break?
Yep, no
problem. I want to
problem.
talk about this one a little bit more. Okay, I see August 1st is earnings on this. So we'll talk about how this is setting up when we come back from Janice in Pennsylvania in just 3 minutes and 2 seconds.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Janice?
Yes, I'm here.
Okay. Was waiting for them to pick up on the board there. Okay, so you spiked to $5.44. Your last high is $5 out here. How would you feel if this thing closed below $5 and you sold it compared to selling it today? How would you feel?
How would I feel? I probably would not feel so good.
So 20 cents makes a difference to you.
I think so. And here, yes, absolutely. For the way this chart looks to me, yeah.
Okay. I would say that there's nothing in here that says that this thing can't go sideways and up until earnings on August 1st.
Okay.
So the question is, how do you want to sit on this thing into earnings? If this thing was, I'd say there would be no question about it if earnings were just 2 weeks away, but earnings about 4 weeks away. But I mean, if you can hang into this thing, you might get $5.50 or $6 out of it, which would be a nice trade going into earnings. So that is, to me, sitting on a fairly decent trade if you didn't take the spike today and get out. That you just put I would just say if it closed under $5, that's where the danger would lie.
Okay.
But there's nothing out here that you basically have something out here that says you're probably not going higher in the next few days.
Okay.
Now, it's just a question of how long you planned on hanging on to it. If it bothers you, the 20 cents, I'd probably take the cash now and look for it. And if it gets back under $5, especially going into earnings, this would be very interesting. I may not hold it through earnings, but holding it into earnings may be very nice. You might see another buck. You might see another buck. So if you wanted to get out of it now, you think the market's kind of pulling back and everything, or you don't want to sit on this and let it go sideways for a while, pull back and see if you don't get an opportunity to get back in it. There's nothing that looks bad in this other than the fact this one day where you spiked the previous high and didn't have any volume. But kind of a horrible day, and I don't want to make a decision on a single candle for the long term on it.
Yes.
But I think it's a great trade. Congratulations. And what do you think you're going to do?
I think I'm going to sit on it because that's what I had intended to do anyway. I've been kind of sitting on this as I was riding it up. And I guess because I got it so low, So I sat on it, and I thought the same thing you did. Hold this into earnings, even if it goes sideways or a little bit up and down. I guess I was just looking at the candle for today, and I didn't know if it was running out of juice.
Well, certainly is kind of at least had an exhaustion move today.
Mm-hmm.
So that kind of means that you're not going to get a lot of cash out of it in the next few days. And like I said, if you can, as long as it didn't close back below $5, I think you still have that kind of nice looking deal. You probably have, let's go ahead and take a look at this thing. We close anywhere positive on the day on the S&P cash.
Mm-hmm.
And I think you've got kind of a floor under this market. Again, not going much higher, maybe 2750 or something into 4th of July. Maybe it just kind of goes sideways. I just think that maybe we're going to see a lot more of these 5-6 point moves up and down in the S&P instead of the 20 and 30, right?
Right.
So it can just, and the longer it kind of goes sideways. Now, one of the reasons I kind of like this is it's got a 20% short interest in it.
Okay.
So you've got a very nice setup here. I'll look at this tonight when I get my new short data. But even if I look at just the daily data, yesterday, 27% of the orders in this thing were short. So you got a lot of people out here. If this thing goes higher, it's probably going to go a lot higher on their money.
Mm-hmm.
They're probably on the wrong side of the trade, I suspect. How many people want to short a $5 stock?
Right.
Yeah, apparently a lot, and I think they're stupid for doing it. So to me, I like the setup here. I like it going into earnings. The only question is whether or not it pulls back enough to kind of scare you out of it before earnings. But beautiful trade. Congratulations.
Thank
you. Okay.
Have a good day now.
You bet. You can be like Janice and call me at 877-927-6648. And as they say, let your winners run. Nice setup. I'm just thinking that you get a nice spike and maybe like a lot of these stocks that this one didn't get hammered so badly, but a lot of these stocks that have massively short positions on them, all you got to do is go sideways. Eventually, those shorts are going to be the weakest hands in the market. To get shorts to pile on and continue to be short, you need downward action. And man, you get into these summer vacations, and the volume starts to wane, and you get a lot of people out there. You get kind of phony buyout rumors and phony rumors of acquisitions, and the shorts, one guy covers, the next guy covers, and suddenly you see a stock up like this, another buck. You want to take your money on that because a lot of times these rumors are not true, but just keep an eye on it. Again, you can call me at 877-927-6648. Okay, Expedia. This is one of the stocks that I was short. I got out with options, and I thought it would be the most impacted and probably would go back down to 100. It may take earnings to do that on issues with Brexit and everything over in Europe. Didn't do it, actually went higher. I was on the wrong side of the trade. But you know what? It's kind of down on almost no volume today. The question would be, does this do the same thing, which is go back up on a lighter volume and squeeze a lot of people out? Let's take a quick look at this. EXPE. Okay. Yeah. It's had a nice pop in short interest. Could you get a 1 day or 2 day huge move higher in this? I think you could. 126.39's it. I don't like being short it right now. I would say that. If I was short this, I would probably go ahead and cover it now. One of the reasons why I think this one could still, you could wake up and find it $20 down lower, is the issues in Italy and also the issues in the UK right now where the May government may fold. You may just wake up tomorrow and find out that her government's gone. That could happen at any day. She's got a lot of problems with her own side, much less the opposition. And I'm just looking at this kind of trade. But you know what? It just hasn't done it. The stock has a horrible habit, too, of only taking the big moves on earnings and basically looking in the mirror. So too high as shorts right now. I'd cover it. Could it bounce? Yeah, we'll talk more about that when we come back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Let's go ahead and update this. I'm wondering if my charts aren't updating correctly. Hang on a second. Okay, off 90. I don't know why my charts are not, they're not updating. Not my charts, my quotes. So I will not spout off too much before the end of the day here, figure out why these things are not updating on the broad indexes. But that is interesting. So what do we have? Somebody in the den, Duffy in the den, is pointing out that we've had some fairly large runs, especially in China. And the one I like, which I missed, it didn't give a good signal at the bottom, which is why. I wanted to see a retest of 33.29. Never got it. I wanted to see a retest of 35.59 on lighter volume. It got heavier volume and then started moving higher. It actually did come off that March 2nd high back down to that March 13th low on lower energy. It was just that you had one day down there with a higher volume. So in fact, the day before was 309 million shares. That was on the 12th of March. So I didn't get into it. These things have some very good runs. And I think all you have to do to look at EDZ is look at the price of commodities. And of course, what was copper today? Dr. Copper caught Ebola. It's under $3. And you still off gold off $4. So we've got kind of a waterfall effect in at least some of these metals and some of the other ones, except energy. And EDZ is mostly raw materials. But this thing's getting very close and hitting the previous December 7th high today. So we're probably going to run into at least some resistance. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.